Hi, welcome to this quick tutorial about plant assets and the decision about whether to capitalize or expense the costs related to a plant asset. First, let's define plant assets. Plant assets are purchases or expenditures for items that are to be used in the organization for more than one operating period, which is usually 1 year. Examples of plant assets include land improvements, buildings, building improvements, equipment, and others. The cost of a plant asset includes all normal and reasonable expenditures to obtain the asset and prepare it for use. Examples of costs include the purchase price, transportation costs, any installation costs, sales and back property taxes, and more. So how do you decide if an expenditure should be capitalized or expensed? The main question is whether the item is going to be consumed or used up within 1 year or less. If the item will be consumed or used up within 1 year, it will be expensed. If it has an estimated useful life of greater than 1 year, then it should be capitalized. One more thing. For small purchases, it is not cost-effective to capitalize a small expenditure. It could cost more to track the plant asset over its life than it is worth. As a practical matter, companies will set a dollar limit below which they automatically expense the cost of the plant asset. For example, a company may purchase a trash basket for an office for $20. While it may be true that the trash basket may have an estimated useful life of 20 years or more, it would be too burdensome to track the small $20 cost. Other examples of small purchases could be a printer or a pen. Both have an estimated useful life of more than 1 year, but are relatively low in cost and so may be expensed as a matter of policy. So what happens when a purchase is capitalized or expensed? If a purchase is capitalized, its cost is added as an asset on the balance sheet, so assets increase. The purchase of a capital asset does not immediately impact the income statement. The plant asset will be depreciated or expensed over the estimated useful life of the asset. If the cost of a purchase is expensed, it is deducted immediately as an expense on the income statement. Expenses are increased, thus decreasing net income. Let's go through an example. Say the Green Hippo Company purchased a new computer system for $50,000. The estimated useful life of the computer system is 5 years. So the question is, would the cost of the computer system be capitalized or expensed? The cost of the computer system would be capitalized because the useful life of the computer system is more than 1 year. For the next question in this example, we are looking at whether the $50,000 that is capitalized would appear on Green Hippo's balance sheet or income statement. The answer is that it would appear on the balance sheet as an asset. A plant asset always appears on the balance sheet. Now let's look at another example. The Blue Heron Company pays $3,500 every year for routine maintenance on its machinery. Would the cost of the annual maintenance be capitalized or expensed? The answer is that it would be expensed. Routine ordinary maintenance expenditures are always expensed, never capitalized. The next question is, would the $3,500 appear on Blue Heron's balance sheet or income statement? The answer is that expenses appear on the income statement. Expenses never appear on the balance sheet. Expenses reduce net income. Okay, that's it. We are done. This video was created and narrated by Dr. Sell-Tietz. Have a great day.